Today's FOMC decision was the start of recalibrating policy. This is the word we've used to describe what was to come, and Fed Chair Powell came back to this idea several times during the press conference. Policy has been calibrated for a meaningfully higher inflation rate. With inflation now coming down closer to the Fed's target and labor starting to soften, the Fed needed to cut. Our stance leading into this meeting was a cut of 50 was warranted. Now, of course, there was a lot of uncertainty and disagreement about what was to come, but we're pleased with the outcome. So why go 50? I think there are several reasons, but for the sake of time, I'll give you two in particular. First is actually what I just said a moment ago. Policy needs to be recalibrated for an inflation rate that has come down to a much more comfortable level. In this context, I think Powell could also argue that they may have waited an extra meeting to cut just to ensure that that was the case. So by cutting 50 now, you sort of make up for that level of prudence toward inflation. Second, and maybe this has now become even more important, we flagged many times in this forum and elsewhere that there are an assortment of cracks forming in the labor backdrop in particular, but it hasn't broken yet. The Fed should look at that as a bit of a gift. When the Fed has cut big in the past, recessions have typically been close or we were already in one. That is not the case today. So by getting to a more neutral stance on policy faster, you give the economic expansion, the soft landing, a chance to keep moving. So what comes next? Powell made it a point to say that a cut of this size is not necessarily indicative of what's to come. As a policymaker, you relish optionality. So there was no way he was going to pre-commit to what happens next. The Fed dots show officials expect an additional 50 basis points of cuts in total this year. But what I would say to that forecast is this. If you get notably weak payroll report between now and the next meeting, which is in November, the likelihood that you get another 50 will be very high. You know, on that point, I think the one thing that I would really highlight is the Fed likes to remind us that they are not data point dependent, that they are data dependent, but show me some weak data points between now and the next couple of meetings, and I'll show you a Fed that will be willing to go big again. And I think that's the right calculus for framing how policy will evolve.